Hello, and welcome to the EisnerAmper Engaging Alternatives podcast series. I'm your host, Elana Margulies-Snyderman, and with me today is Phyllis Costanza, Chief Social Investment Officer at Advanced Portfolio Management, an independent specialty asset manager that designs and manages customized investments for global institutional investors. Today, Phyllis will share her outlook for investing via social factor analysis, including the greatest opportunities and challenges. She will also discuss being a woman in the industry and more. Before we dive into the conversation with Phyllis, don't forget to hit that like button and subscribe to EisnerAmper wherever you listen to your podcasts. And you can also find us on YouTube at EisnerAmper. Hi, Phyllis. Thank you so much for being with me today.
It's such a pleasure to be here. Thank you for having me.
So to kick off the conversation, tell us a little about yourself and how you got to where you are today.
Well, I had an interesting career from being a ski instructor to working in government, working for philanthropic organizations. But I'll start out with my last 15 to 20 years. I really spent most of my career, with the exception of being a ski instructor, at the intersection of finance and social impact. And for over a decade, I led UBS's global social impact team. And I was also the CEO of the UBS Optimist Foundation, where we built a number of innovative financing models to address some of the world's most pressing challenges. And then a year ago, I joined Advanced Portfolio Management to really combine my social factor expertise with their quant approach to analyzing social issues for public markets. And what really struck me was how overlooked social factors are compared to environmental factors or governance factors, despite being really critical to company performance. And so that insight inspired us to build something called the Social Intelligence Index, which is a systematic strategy that proves social factors are financially material and can drive consistent alpha.
At EisnerAmper, we are creative problem solvers that take a 360-degree approach focusing on you. We're an award-winning firm with decades of experience providing accounting and advisory services. EisnerAmper, let's get you ready.
Great, Phyllis. That segues nicely into the follow-up question I have for you. Given Advanced Portfolio Management's focus on social factor analysis, I would love to hear your high-level outlook for the space.
You know, if you think about it, intangible assets, things like talent and employee satisfaction, reputation, customer trust, really make up a substantial part of corporate value, yet investors rarely measure these things. And so I believe that the outlook for this is very strong because the investment community is realizing that things like human capital, customer loyalty, and reputation aren't just soft issues. They are bottom line issues. And we're really moving past the old ESG framing into a world where intangible assets explain a growing share of corporate value. And we're able to do this now because of AI and large language models. We can take what have been very kind of woolly and qualitative factors and approach it from a quant perspective. And our research shows that companies that perform really well on these dimensions not only avoid costly risks, but they also capture market share a lot faster and generate outsized returns. So I see social factor analysis becoming a mainstream part of how investors understand risk and reward.
And Phyllis, as a follow-up, what are some of the greatest opportunities you see in that space and why?
Well, I think, some of the richest signals are hiding in plain sight in employee reviews, customer complaint, news sentiments. And so the biggest opportunities lie in harnessing unstructured data at scale. And this is where AI and LLMs come in. So things like employee satisfaction, customer sentiment, litigation records, media coverage, these are really rich, forward-looking indicators that traditional financial analysis misses. So by quantifying these signals, we can uncover undervalued companies before the market fully prices in their strength. Or even conversely, we can avoid companies that are heading towards brand or workforce crisis. So if you look at something like Target, Target had really denounced all of its DEI practices. And frankly, that was why many people shopped there. And it had such a loyal customer base who then ended up boycotting after they announced these cuts. And so that's the type of thing that we need to be aware of to identify, is this company's brand? Is it going to be destroyed by either playing into or not issues that address these social factors? So really by quantifying reputation, human capital, we're really giving investors a head start on things that the market hasn't priced in yet.
Phyllis, on the other hand, what are some of the greatest challenges you face in your space and why?
So I would say probably the biggest challenge is the scarcity and inconsistency of standardized disclosures. What we're seeing now is companies are reporting very selectively. That's always been true, but now it's even more selectively, which means that we can't just rely on things like annual reports. So what we need to do in order to overcome this scarcity and inconsistency, we really have to find alternative sources. So looking at government databases, sentiment, which you can track from news sources on a daily basis. And another challenge is that people still equate, social with philanthropy or values-based investing and even concessional returns. And so we really got to change that message because our work is about financial materiality. It's not about ideology. And breaking through those misconceptions really take time. But the performance data speaks for itself. We're seeing that by focusing on these social factors, we can outperform the S&P 500 by anywhere from 400 to 800 basis points.
Phyllis, to shift gears a bit, being a woman in the industry, you're highly accomplished, and I would love to hear what you're doing to inspire others to follow in your footsteps.
Well, thank you. It's, as you know, in the finance industry, it's still male-dominated, but that women bring a very different perspective. So it is actually, that's an advantage. So we have an edge that comes from really not fitting the mold, in everything we do and how we think. And so I have found that oftentimes being the only woman in a male-dominated environment, while it's lonely, there's an advantage there because we really come with a very different perspective. And, early in my career, and I'm sure I'm not alone, I felt a lot of pressure to fit into existing norms. And over time, that wasn't helping me. And so, what helps is just leading authentically how you are and showing results because the results will speak for themselves. And I try really hard to mentor young women I meet with many. I've probably got a half dozen young women who I mentor. And also when I'm leading women, I really give them a very broad remit to be able to demonstrate their leadership skills and also to excel.
Phyllis, we've covered a lot of ground today and wanted to see if there are any final thoughts you'd like to share with us.
Yeah, I would close by saying that I think the biggest overlooked assets in the market today are people, reputation, and trust. And companies that manage these well deliver much better financial outcomes. And as our social intelligence index proves, social factor analysis isn't about doing good for its own sake. It's about identifying the hidden drivers of performance. And investors who ignore these signals are leaving alpha on the table.
Phyllis, I wanted to thank you so much for sharing your perspective with our listeners.
Thank you so much for having me. It's been a pleasure.
And thank you for listening to the EisnerAmper podcast series, Visit EisnerAmper.com for more information on this and a host of other topics. And join us for our next EisnerAmper podcast when we get down to business.